Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in, at any time during this video, when you feel the video added value, feel free to smash the like, ring my bell, hit subscribe, or leave a comment and share your thoughts. I would appreciate it, even a simple thank you. Let's dig in and take a look at Bitcoin's perpetual futures and options, derivatives, in other words. Let me get my mouse highlighter on so you can see. This is Coinalyze. Time frame is 1 day, and we can see Bitcoin over here. It's trending down in the last 3 days, and open interest. This is aggregated, backed by stable coins. You can see it went up slightly and then tapered down here. But however, open interest backed by coins such as Bitcoin or Ethereum, it's pretty much going horizontal, pretty much flat. Here it's sitting at 7.01 billion aggregated, going up from roughly about 6.02, so about a billion roughly difference there. And let's go down here and take a look at the aggregated predicted funding rate. Here I want to draw attention to this one in particular. This is the 27th of February. And funding here was predicted at negative 0.009. Actually, it's probably a little bit more. Negative it's probably negative 0.0125 roughly. No, actually, no, it's a little bit more. Let me zoom it out. Right here. So negative 0.0129. Yeah. No. Yeah, roughly. Negative 0.1029. So negative 0.1029. And I know there's some people think that because of the negative 0.0129, because it's negative funding and open interest, it wasn't that high. Some people think because of the negative funding, the next day, the 28th, there was a short squeeze and price rallied. I'm going to disagree with that for a couple of reasons. One, Bitcoin down was the open interest backed by stablecoin was at its lowest point during that time right here. It was really low. So yeah, negative funding was there. Shorts would be paying long. However, open interest wasn't that high. It was really low. And not only that, but Bitcoin rallied at market opening. So if there was a short squeeze and someone wanted to squeeze it, they could have done any time beforehand. So they didn't have to wait until the U.S. stock market opened. So is that a possibility? Sure. I just disagree with it. I think money moved over from the stock market because stock market was going down prior, and they were reallocating funds into BTC, and that drove the price up. Sure, it liquidated shorts, but it wasn't for the purpose of a short squeeze. So that's in my opinion. So right now, you can see that funding is positive here. Oh yeah, before I move on, I want to show you this other chart. This chart here is from Glassnode, and it's a Bitcoin future perpetual funding rate, all exchanges. You can see here on the on that day, it was negative roughly. This one it shows negative 0.008. That's different charts show different numbers. But anyway, so you can see this spike here, negative 0.008. You know, it's pretty close, and a lot of people looked at this and they're like, "Oh yeah, this is the reason why." But open interest wasn't that big, wasn't that high. So I want to clarify that. You can see here open interest for March the 3rd today. It's sitting at 0.005, and 0.01 positive. That is, it's typically somewhat neutral across most exchanges, and so this is still pretty neutral here, even though it looks high, but it's still neutral. Let's flip back to the other chart here. And you can see that right here. It's pretty similar. It's positive, but still pretty much neutral. And but when it's positive like this, even though it's neutral, longs could be paying shorts to hold their positions. And you can see price is a little high here. I mean, this is open interest here, backed by stablecoins. It's at 7.2 billion, dropped down to roughly about 7.07 billion aggregated. And so could it potentially move downward? Sure, but this is somewhat neutral, so it's not that big of a deal here. Price did move down, but I don't think it was because it was to liquidate the longs, because, you know, even though open interest was slightly high, higher than down here, about $1 billion higher, but this is not that strong. So, I don't think this is that big of a deal here to move price. I think price just moved because the correlation to stock, Dixie was moving up, so people were mitigating risk. They were doing risk off, and so they sold. That's what in my opinion. Going down here, I want to point out to this. This is spot, aggregated CVD for spot. Even though we're talking about derivative, but I wanted to show you here. The demand has been pretty much going sideways. You see that? It's not really picking up. You know, it went up slightly here, dipped back down, went up, but it's overall just still horizontal. There's not a lot of demand here. So I want to keep an eye on that. So basically on this chart here, perpetual futures, not much happening here. Yeah, open interest went up slightly, but funding rate is still somewhat neutral. So not much there. And we talked about this. Let's go to BTC open interest weighted funding rate. Again, this is weighted by the funding rate weighted by the by BTC's open interest. So the higher the open interest, the more weight it gets added to the funding rate. So here you can see red is price, green is funding rate, and 0 mark is right here. So if you draw that across, it's roughly around the 40 mark line here. And so funding rate, weighted funding rate is currently positive, but if you look at it, it's positive by 0.00594. So still relatively neutral in my opinion, even though it's weighted. And you can see there's inverse correlation here. The funding rate's dropping as prices moving up, and previously funding rate was going up and price was going down. So there's inverse relationship here. Bitcoin is moving slightly up right now at 42.5. But we'll see what happens if this funding rate continues to drop here. Price might go up slightly, and that's what it's doing. But we'll just monitor and see what happens. Strike price. So strike price for tomorrow. Sorry, this is how their charts are. This is from lavitas.ch. Max pain for tomorrow is 40K. It's right here. And I don't think it's going to move to 40K. I think it'll move near 40K, but I don't think it'll get to 40K. And I'll tell you why. But after we go through a couple more of these max pain charts. For the 5th, max pain is 43. I can't even read it because it's so... Who would put purple on black? Seriously? Come on. 43K for the 5th. So they're predicting that it will drop down and then move back up. So remember those two dates, the 4th and the 5th. And on the 11th, max pain drops back to 40,000. So we want to take a look at open interest, because the higher the open interest, the more likely max pain will be realized. So the 4th is, well, pretty low. The 5th is even lower. So chance of it moving towards that is, you know, if it was higher open interest, yeah, I could say, yeah, they're gonna move. They're gonna have a higher probability of moving towards max pain. But because open interest is so low, yeah, especially in the fifth. I don't think it's gonna matter that much on the fifth, but if it does move there, I think it's more coincidence than anything. The fourth, yeah, there's some open interest there, but not a big deal. As far as volume is concerned, though, volume on the fourth, it's got decent volume here, and the fifth got lower on the lower end. And I look more at open interest, but I do take into consideration volume. But because open interest is relatively low, I don't think volume is going to play that big of a deal. So that's why I think it's going to move close to 40K, but I don't think it's going to move to 40K. And same thing with the fifth. It will range, but I don't think these factors matter for the fifth. The ones we want to pay attention to is March the 25th. That's a big deal. And June the 24th, that's a big deal. So if you look at March the 25th, got high open interest, high volume, and same thing with June the 24th, high on both. So as far as high block liquidation levels, the last one I the last time I did this, I shared that we had, gosh, I think it was 9 billion or something like that, somewhere around there, 9 or 8 billion. And then I mentioned that, yeah, it's not a matter of if, it's a matter of when. The high level difference of this was cumulative liquidation levels delta, and it was excess long liquidation levels. And we had roughly around 8 or 9 billion. I said that it's a matter of it and when it'll happen. And guess what happened? Liquidated a bunch of them. And now we are excess short on high liquidation levels. So we have excess amount. That doesn't mean that we don't have any longs. We just have excess, more short liquidation levels, about roughly 1.4 billion. And this is just on Binance. So you can see tremendous amount of levels up here and down here. Down here is this is long liquidation levels, and up here are short. So there are more short levels up here than there are long levels down here. That's why you have this red area here. So given that the price is right here, it could literally move in either direction and liquidate either one of them. So I would give a probability 50-50. But right now the levels up here are closer to the price line, and price has dipped down slightly. I would either 50-50, either way, and it probably will do both to liquidate both. But it really, again, depends on the macro environment factors, because there's a lot of jitters in the market, and with the positive correlation with Bitcoin back with S&P 500 and NASDAQ, and also negative correlation with the Dixie. We want to take a look at all those factors, but this one could be 50-50. So overall, what do I think? I think open interest and funding rate for perpetual futures right now, it's they're not factors, although open interest is slightly higher than before, but funding rate is still neutral, so not a factor there. Now, as far as max pain, I think we'll get close to max pain. I think we'll get the lowest I think we'll get to is probably 40.5, but I think it'll range between 40.5 and like 44, but more towards the lower end. And as far as I thought I had some more. What happened to my GEX? I think I had one more. Give me a second. I had a chart that I forgot to put in here. Let me find it for you. There's the GEX. I think it's important to take a look at the GEX too. I thought I missed something. Let me go through them again. Make sure I didn't miss anything. That's weighted. Strike price. Yeah, I missed my GEX, so give me a second. What happened? Hello, Gex. Sorry about this. Okay, here we go. Here's the Gex. So at 42 right here, you see how we have a really tall graph for the call at 0.6, and we have a shorter bar for the negative for the call, for the put, I mean. So negative 0.2, positive 0.6 right there. That could be very volatile. And when you see this, so with the smart money, when they might tend to hedge against the call and the put here. So at 42, I mentioned it was going to be very volatile. So in this case, was thinking, the reason I was thinking that it was going to move towards the lower end, near towards 41.40.5, is because I think they're going to hedge against this 42 right here, this call 0.6. They're going to hedge against it, and so I think price would actually move downward. So that's why I want to show you this. Yeah, that's about it. Sorry about the chart there. But if you found value in this, feel free to smash the like, ring my bell, hit subscribe. And this is probably my last video for tonight because I want to spend some time with my girlfriend and chill. So I'll see you in the video tomorrow. Peace.